So Klarna's buy now, pay later interest-free loan model may be backfiring.
Klarna was never supposed to work. It was supposed to attract investors who are betting on Klarna attracting other dumb investors. This business model has its own limitations.
Well,
if this is a bad business model, so what? It's bad for Klarna. They lose money. It's not my problem. It's their problem.
So Klarna has officially f***ed around. Now they're finding out. You see, Klarna, the flashy fintech that allows people to buy now and pay later, has officially lost $99 million in a single quarter. And I know what you might be thinking. This is a sign of really tough times, but it's more than that. It's the story of corporate greed, risky lending, and failed expansion of a company that got way too big for its britches too quickly. From Walmart to DoorDash, Klarna went all in, and now it's crashing hard. Let's talk about exactly what is happening and what this means for all of Klarna's users. If you've seen other videos on my channel, it's probably no surprise that I am personally not a very big fan of Klarna. I do understand that there are a lot of people out there that can benefit from buy now, pay later apps like Klarna, Affirm, and Afterpay. These buy now, pay later opportunities are a necessity in a lot of households just to make it to the next payday. I am personally not a fan of buy now, pay later because from my point of view and the research that I have done, I personally find them very predatory, and I can see it as an easy way for irresponsible people to put themselves in an even worse financial situation without realizing it. I think a lot of people view the buy now, pay later apps like Klarna, Affirm, and Afterpay as being a saving grace in their finances. I view them as the wolf in sheep's clothing. But let's talk about exactly how Klarna works, and we'll get into how all of this disaster has unfolded. You've heard me mention Klarna, Afterpay, and Affirm. Those are the three big buy now, pay later apps, and they might be the only ones, honestly, because they're the only ones that I ever hear people talk about. It basically allows the customer to pay in one of three different ways. For instance, you can either split your payment into 4 biweekly payments, you can pay later, which is paying the full amount in full within 30 days, or you can simply finance it with an interest rate over the course of 6 to 36 months determined by the amount and the payback percentage and period you select as the customer. So Klarna or these buy now, pay later apps are the ones that actually pay the merchant up front, and then the customer pays Klarna. So how does Klarna make money in all of this? Klarna profits from the merchant fees, any interest for the payments that the customer might select, and late charges. So the bigger problem here is that Klarna expanded way too fast. They didn't just offer easy payment options within their own app, they actually started partnering with a lot of companies, including monsters DoorDash and Walmart. Yeah, that's right. In case you didn't know, for the last couple of months, you've been able to use Klarna to buy now and pay later, even at Walmart. People started splitting groceries into 4 easy installment payments. That to me is the sign of a bigger problem. And I personally view it as Walmart and Klarna cashing in on it. So exactly why did Klarna do this? From what I can tell, Klarna wanted growth at all costs, but they didn't care if users had good credit or any credit at all. Some payments with Klarna are interest-free, but you see, Klarna doesn't make the big money on the interest-free payments. They make money on merchant fees, penalties, and interest. So in a sense, the worse off their customers seemed, the more late payments they might have, the longer pay terms they might require, the more interest and penalty fees would assist in Klarna help growing their profits. But that can be a real gamble when you start lending to people who had no intention to pay it back. And Klarna fucked around and found out.
The more you fuck around, the more you're gonna find out.
All of that aggressive lending has come at a price. In Q1 of 2025, Klarna has reported a whopping $99 million net loss, with consumer credit losses amounting to $136 million. And that's a 17% jump. It essentially means Klarna was loaning money to millions of people, and a huge number of those people just simply stop paying. I want to give you a few real-life examples as to what exactly this looks like. These were all compiled from sites like Reddit and forums of people discussing how they just simply cannot afford to pay back a lot of their debt that they took out, specifically with apps like Klarna. And some of them took out these loans with zero intention to ever pay it back. One Klarna user reported using Klarna to get DoorDash multiple times a week and ran up a $300 bill over the course of a month. After they were laid off, they defaulted entirely. Klarna still had to pay DoorDash for all of that food that was delivered, but Klarna never got paid by that customer. Another person mentioned financing a $1,200 smart TV from Walmart. They used the Klarna and Walmart partnership in order to do this. They paid the very first installment as agreed, and then they vanished. And Klarna was left holding the bag with zero collateral. Another shopper split up payments for a $400 concert ticket. They went to the event, but skipped all of the payments for it. Now, when you do something like buy a concert ticket, you go to the concert. It's not exactly like Klarna or any other lender can simply repossess an experience. So again, Klarna was left holding the bag, had to pay the venue, and they are unable to collect from that shopper. And yes, people are even using Klarna to pay for things like groceries. One shopper juggled multiple 4-payment installment plans with Klarna just for simply groceries and cleaning supplies. But when their payday got delayed, their payment chain collapsed. And so did their Klarna credit. And here's something that a lot of people are not thinking about. It does seem like a common consensus on a lot of forums is that people think that they can just borrow money from Klarna and walk away because there's really no credit checks at all. Klarna only really reports to credit agencies if payments are missed, but I mean, let's think about this here. A lot of people that are borrowing money nowadays don't feel like credit is that important. They might feel like they could never buy a house anyway. Interest rates are going to be high no matter what. So exactly what reason do people have to protect their credit score? So if someone is willing to just give them money, at least the illusion of just giving them money and they can simply walk away, where is the incentive to even keep up with these payments? So there are a lot of people that are even excited about the idea of Klarna filing bankruptcy because they think that that will just simply erase their debt with them as well. I mean, if a company gives you money and then they go under, there's a lot of assumptions that the debt is just simply erased, but that is not how it works. The debt does not vanish, it just simply gets sold. If Klarna were to fold, then all debt would basically just get sold off to collection agencies. And that means damage to your credit score, late night harassing phone calls from debt collectors, and possibly legal action. All because you wanted to put pizza or a TV on an easy 4-installment payment plan. Bottom line, Klarna might collapse under its own weight, but that debt that they handed out to you, that'll stick. So this was not the first time that Klarna reported losses. This was, however, the largest reported loss in one single quarter. So when this happened, Klarna started to panic, and the fastest, easiest way to try to save money was to use, you guessed it, AI. And the easiest way for Klarna to utilize AI to save money? Fire its employees. In my opinion, that's probably one of the saddest things that comes with the possible collapse of Klarna. It's not just that responsible borrowers will lose the ability to utilize a payment plan responsibly for the things that they truly need. It's also because so many people lost their jobs because Klarna got way too greedy and tried to grow too quickly. So don't get me wrong, I know that it is quite obvious that I am not a fan of Klarna, and I know that it looks like I am here cheering on their demise. I do understand that there are a lot of people that are going to be negatively affected by this. There are a lot of people that do use buy now, pay later opportunities responsibly that are no longer going to have Klarna as an option if they file bankruptcy and fold. But I do also like to see greedy corporations get what's coming to them. Klarna could have been a wildly successful company if they didn't get greedy. And because they got greedy, millions of responsible users and thousands of employees will no longer have that company's help. And that is probably the saddest part of this entire story. Klarna was also planning a $15 billion IPO announcement in April of 2025. But when tariffs and inflation hit the US and those massive reported net losses hit the news, investor confidence tanked. And they just quietly postponed the IPO. I mean, honestly, it's not really that hard to see why exactly investors pulled out. So what exactly does this mean for you as a consumer? Apps like Afterpay, Affirm, and Klarna, the buy now, pay later movement, do seem convenient until they become a trap. Klarna's greed contributed to and encouraged irresponsible spending from consumers because they were approving people that were high risk to just keep spending money, putting themselves further and further into debt. If you're using buy now, pay later to pay for your groceries or your gas, you're not buying time. You're borrowing trouble. And Klarna's losses show us what happens when a company pushes debt onto people that can't really afford it. Because remember, Klarna does make money from merchants, but it makes a lot more money off of interest and penalty fees. That means that Klarna was profiting the most money off of the people that were struggling the most to make their payments. And that's dirty. So what do you think? Did Klarna gamble way too hard? Should companies be held accountable for pushing debt onto struggling customers? Let me know down in the comments. Please make sure to like this video and share it with somebody if you found it useful. And also don't forget to subscribe and ring that notification bell. That way you're notified of any time I post another video. Thank you again so much for watching. I will see you guys in the next one. Bye.